Hello and welcome to today's video on how to use mergers and acquisitions for business expansion. In this video, we'll discuss how businesses can use mergers and acquisitions as a strategy to expand their operations and reach new markets. First, let's define what mergers and acquisitions are. A merger is when two companies combine to form a new company, whereas an acquisition is when one company buys another company. Both of these strategies can be used to achieve the same goal of business expansion. One of the main benefits of mergers and acquisitions is that they can provide access to new markets and customers. For example, if a business wants to expand into a new geographic region but lacks the resources or expertise to do so, it can acquire a company that already operates in that region. This can help the business enter the new market quickly and gain a competitive advantage. Another benefit of mergers and acquisitions is the ability to acquire new products, services, or technology. For example, if a business wants to expand its product line or enhance its technology, it can acquire a company that specializes in those areas. This can help the business stay competitive and innovate in the industry. However, there are also risks associated with mergers and acquisitions. One of the main risks is the potential for cultural clashes between the two companies. When two companies with different cultures merge, it can be challenging to integrate the two cultures and create a cohesive team. This can result in employee turnover and decreased productivity. Another risk is the potential for financial losses. Mergers and acquisitions can be expensive, and if the integration process is not successful, the business may not see a return on their investment. It's important for businesses to conduct thorough due diligence and consider all the potential risks and benefits before pursuing a merger or acquisition. Now that we've discussed the benefits and risks of mergers and acquisitions, let's talk about how businesses can use this strategy effectively. The first step is to identify potential acquisition targets or merger partners. Businesses can use market research and industry analysis to identify companies that are a good fit for their expansion strategy. Once a potential target has been identified, it's important to conduct thorough due diligence. This includes evaluating the target company's financials, operations, and culture. Businesses should also consider the potential synergies between the two companies and whether the acquisition or merger aligns with their long-term strategic goals. During the integration process, it's important to communicate effectively with employees, customers, and stakeholders. This can help to mitigate any cultural clashes and ensure a smooth transition. It's also important to have a clear plan for integrating the two companies and achieving the desired synergies. In addition to the steps we've discussed, there are also other factors to consider when using mergers and acquisitions as a strategy for business expansion. For example, businesses should consider the regulatory environment in the industry and any potential antitrust concerns that may arise from the merger or acquisition. Another important factor to consider is the financing of the merger or acquisition. Depending on the size of the transaction, businesses may need to secure financing from investors or lenders. It's important to have a clear understanding of the financial implications of the transaction and to develop a financing plan that aligns with the business's strategic goals. It's also important to consider the impact that the merger or acquisition will have on employees, customers, and other stakeholders. Businesses should develop a clear communication plan and be transparent with stakeholders throughout the integration process. This can help to mitigate any concerns and ensure a smooth transition. When using mergers and acquisitions as a strategy for business expansion, it's important to have a long-term vision for the future of the combined company. This includes considering how the acquisition or merger will impact the business's overall strategy and how it will position the business for long-term success. One example of a successful merger and acquisition is the merger between Disney and Pixar. In 2006, Disney acquired Pixar for $7.4 billion, which allowed Disney to expand its animation capabilities and gain access to new markets. The acquisition also resulted in a cultural shift for Disney, as they adopted Pixar's innovative and collaborative culture. Another example is the acquisition of Instagram by Facebook in 2012 for $1 billion. The acquisition allowed Facebook to expand its social media capabilities and reach a younger demographic. The acquisition has been successful, with Instagram continuing to grow and add new features. Furthermore, there are different types of mergers and acquisitions that businesses can pursue, each with its own advantages and challenges. Let's take a closer look at some of these types. 1. Horizontal merger. This is a merger between two companies operating in the same industry and at the same level of the value chain. 1. The goal of a horizontal merger is typical to increase market share, reduce competition, and achieve economies of scale. 1. An example of a horizontal merger is the merger between two airlines, such as Delta and Northwest Airlines. 2. Vertical merger. This is a merger between two companies that operate at different levels of the value chain, such as a supplier and a manufacturer. 2. The goal of a vertical merger is typical to improve efficiency, reduce costs, and gain control over the supply chain. 2. An example of a vertical merger is the merger between Exxon and Mobil, two oil companies that operate at different stages of the oil production and distribution process. 3. Conglomerate merger. This is a merger between two companies that operate in unrelated industries. 3. The goal of a conglomerate merger is typically to diversify the business's portfolio and spread risk across different markets. 3. An example of a conglomerate merger is the merger between Amazon and Whole Foods, a technology company and a grocery store chain. 4. Acquisition. This is when one company acquires another company's assets or ownership stake. 4. The goal of an acquisition is typically to gain access to new markets, products, or technologies. 4. An example of an acquisition is Google's acquisition of YouTube, which allowed Google to expand its video capabilities and reach a wider audience. When considering a merger or acquisition, businesses should carefully evaluate the potential benefits and risks of each type and choose the strategy that aligns best with their goals and capabilities. It's also important to note that mergers and acquisitions can be complex and time-consuming processes, often requiring the involvement of legal, financial, and regulatory experts. Businesses should be prepared to invest significant time and resources into the due diligence and integration process to ensure a successful outcome. In conclusion, mergers and acquisitions can be a powerful tool for business expansion, but they come with risks and require careful consideration. By identifying the type of merger or acquisition that aligns best with their goals and capabilities, conducting thorough due diligence, and developing a clear plan for integration, businesses can use mergers and acquisitions effectively to achieve long-term growth and success. Are you struggling to grow your business? Book a free consultation with us today and let our marketing experts help you take your business to the next level. With our proven strategies and tactics, we'll help you attract more customers, increase sales, and drive growth. Don't miss out. Schedule your free consultation now and start seeing results. Thanks for watching, and don't forget to like and subscribe for more great content.